Okay, I'm gonna get going. What's up, guys, and welcome to Monday's lesson. I'm not too sure what lesson number this is, but we're getting close to the end of tier 1 content. And then what I'd like us to do is start having some practical weeks where I'm gonna set some homework to draw up some charts and stuff. And I want to see how well you guys are drawing up the charts based on the first few lessons that we did, as well as checking your trading plans. I did have some messages that guys want to keep their trading plans a secret, so I'm not going to go over them here tonight, but I will in my own time. If you just send it to me, I will then get on to having a look at them and giving you some feedback, and yeah, just some overall feedback on that, as well as your back testing. If you do some back testing, send it to me. I'm going to go over that. So I was meant to be in Paris today, but I'm only leaving tomorrow night. So Wednesday we might be iffy for a lesson, or I might pre-record something for you. I had to go fetch my visa today. It didn't arrive on Friday like we thought it would, but I've got it sorted, so I'll be off tomorrow night to Paris. But in saying that, today's lesson, I'm going to take you guys over a tool I use to confirm my order blocks. And it's a little bit of a hybrid theory into smart money concepts. I don't see any smart money concept traders really using volume. So as we know, with smart money concepts, we're trying to get in with the smart money, which has large volumes of money to put in the market and take huge positions. So Stu's just joining us. Stu, we're going to go over incorporating volume into our smart money concepts, which not many traders use, but it helps us spot order blocks or where institutions have gone into the market to almost give us an extra confluence for finding where the next move will come from. So what I'm talking about is this tool right here. It is called the fixed range volume profile. Okay, so you'll find it I think in here. Where is it? Nope. In here, fixed range volume profile. Okay, and how we draw this is, let me just go back to full screen. So we draw it in our zone. So if we look here, we had to change a character to the downside, and then we had to move up, fill this fair value gap here, fill this breaker block here. If we look here, we can see where the volume is in the market. How it represents itself as a wave. Now I'll give you guys my settings at the end of me showing you how to use it. So this red line here is what we call the null point of control. This red line. So this is where the highest volume was traded in this range that we've highlighted here. This top here. So we've got our order block here. Our supply zone. And we have a confirmation with the null point of control directly in the middle of this order block. And we can see how price respected this null point of control. So you would set your short position on the null point of control, getting yourself an even tighter stop loss. So you see how if we just entered at the bottom of that candle there, order block, we've got a 3.9, a 4 to 1. Using volume, we can see where the most volume was traded in this range to be the null point of control, and extended us nearly to a 6 to 1. Okay, so that's a great example over there. Now if we go to say this breaker block here, would be probably this one here. And we can confirm that one by using our volume profile. You see how it confirms that it's this auto block, not this auto block, because of the null point of control here. So this is just a tool that I've incorporated with my trading. So we know breaker block with the change of character. This wouldn't be your auto block up here. This is just something that I use to definitely on the higher time frames to see where institutional money is getting into the market. Let me just take you through my settings quickly. So I'll record the video, gents. So just pause the video at this time. Let me see the recording time on OBS. 6 minutes and 20 seconds in. You can then come look, rows 128, number of rows, up and down, volume area target 72, style, this is how I have it, blue and yellow, just contrasts nicely, and the point of control in red. So yeah, save that as a template. Get this tool, the volume area, fixed range volume profile in your favorites, and you draw it from left to right on the chart, and you'll find where the most volume is. So you see how price broke up here, came straight back to the volume, maximum volume range, and then shot back up. That's a perfect break and retest, break of structure into the order block. So we had that order block there. Take you back in time. Here's a perfect example of one here. So we can see we've come back into this order block here, rejected, change of character on the lower time frames. Let's get the 15-minute up. Go back to this. Where am I? Gotta go back. Had a change of character here. Comes back into the null point of control. Then you know where your order block is. Helps you just confirm where that order block would be. And if we go back to the 1 hour, you'll see how price respected and literally didn't close below. See those wicks, how it came into the null point of control and just rejected that completely. Now going into the fixed volume range here, the settings. So you see where it goes from clear color to almost see-through. This we'd say is the low range. Let me make this thicker and red for the low. This is the low range of the volume, and conversely this is the high range. Let's make it green. So in saying where the null point of control is, if you do see other big waves, say this wave here was within the bounds of the high range or the low range, you would have to look at both, because price might not want to come down into the null point of control and would rather respect a volume spike a little higher or a little lower. So in saying using the null point of control, if it's as clean as this is your order block. But we can spot other examples of this. Let's just play around with it and we'll find. See here how it respects the low. See, I just found this randomly. This is the low range. See how it respects. It doesn't close once below the low range of the volume. So that's why the high range and the low range is very important, as well as your null point of control. Your null point of control would help you find a narrower entry on, say, an order block like this here. Or it would probably be on a higher time frame. No, you see it's a breaker block here. So you see how that low of the range would have brought your order block a lot higher to this one here. Still would have made profit out of that. You can go to let's go in here even. When the market's on its last legs before the change of character. You can see our price dipped into and respected that low of the fixed volume range perfectly. Look at that. Not once did it close below the null point of control. And we can see we had another wave in here. So we'd have to watch price when it comes into this zone here. This high of the wave here. I wouldn't call this the null point of control, but I'd call it a point of control. The null point of control is the red line. So this I would have in dashed and just watch how price reacts to this. But we can see it knocked off it as well as null point of control and the low point of control. So we can even go to the daily. Daily. This is for all you swing traders out there who have jobs, etc. to do. Let's go into something even like US oil. Fixed volume range. With these couple days, you can see how it refines your entry. Could have done this whole zone maybe.
Okay, I found this on the web for how to find your entry.
What is Siri doing? Sorry, that was Siri. You can see that spark there and how price broke this order block. So you'd refine to find where your order block would be. Boom, straight over there. So that is fixed volume profile and how we can use it with our analysis to find a better entry. So here on oil, if we are to long, looking up, we've had a great change of character here. We have respected this order block, but because of the change in character, we can see it splits our order block perfectly here. Right there. Null point of control. So what do? We set our alert maybe under this low here. And once it passes this alert, we watch the reaction from the null point of control. Get tighter stop losses. Because if you were just to long this order block and look to take out these highs into this fair value gap here. Fair value gap up here. Let's take our Fibonacci, let's check. Yes, it's above the 50% zone. So I would take 50% off here. Stop loss to break even, let it run. Nearly a 4-to-1. But if we refine our entry to the null point of control, we make it an 8-to-1. That is a crazy doubling of our profits with one tool. Now let's see what price does here in the next. We'll check back next week. I'll put this up for watching. This could be a good trade for us. Yeah, for sure. My end target would be this order block here, with definitely a TP here of 50%. Why? Because it's over the 50% mark. Price becomes a discount to go short in the eyes of the market makers. So we could see a rejection off an order block here, which caused the break of structure. And we can use our fixed volume profile to have a look at this zone. The top of this order block. So it would be this order block here, where we would see price reject from. So to be sniper, 12 to 1, you could take an awesome null point of control to null point of control with a 50% take profit. I would actually say just over these highs here. We can just break these highs, then this high would be broken. So yeah, that's perfect. That's what I'd look on oil. Brandon, Warren, Stu, you guys are in the lesson. Do you guys have any questions on this tool right now? Should I show you some more how to use it? And then secondly, do you have any trade setups you want me to go over? Brandon, we'll start with you.
How's it, man? Hope you're well.
Yeah, good, and you?
I'm good.
Good, bro.
Sorry, I just wanted to double check. In connection with placing the specific tool now,
Yeah.
what makes you decide where exactly you're gonna place it and exactly at what time frame you're gonna use it exactly as well?
Okay, time frame, I'll answer that first, is where the order block looks the cleanest. So you see this order block, how it looks clean. Remember those candles I drew? So I'm happy with this daily order block. So I would draw it on the daily, and where I would do it is a couple candles before and a couple candles after the order block that I'm looking at. Because I don't want to include price. So you see I drew it from this candle to this candle here. I don't want to include price from back here because price is being traded up here. You see how it still gives me the null point of control here, but I need it for the low. So what is the candle that caused the low, and what is the candle that went away from the low? If you could keep it like that as a rule of thumb. Try and just catch the top and try and just catch the bottom. Does that make sense?
Okay, that's cool. I see you mentioned also that you also use it within a change of character as well.
Yeah, so here we had a change of character, break of these highs on the daily. We've got a strong low now. So I'm using it on that low of the change of character to find that entry. Does that make sense?
Cool, 100%.
Yeah, you can also use it for break of structures as well, you know, for continuations. So you see how we had break of structure here, and we have this massive order block up here, so you can still use it on this high. You see I'll go one candle before the high and one candle after, so I'll go like that range there. Boom, null point of control. Look at those bounces, 2 in fact. Boom, 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 straight on the null point of control. Brandon, do you have any setups that you've been drawing up or anything that I could help you go over today?
No, not at the moment. I'm just getting used to all the new info, you know, so I'm just
Okay, cool.
more just practicing everything.
Yeah, so this,
Yeah, once I get a proper hang of everything, and then once I can like draw, you know, fair value gaps and everything else,
yeah,
then I can, you know, start practicing properly and, you know, actually using it to my leisure essentially. So,
Yeah, 100%. So I think this week that should be your number one priority is to getting some time on the charts, okay? Because the only way you're going to get better at drawing up and seeing the mistakes you're making is drawing it up and then let me go over it with you, and then you'll get better and better quickly. Rather than waiting till, next year to start drawing and now I'm ready to trade. No, you must be doing it at the same time.
indeed. But shot, man. I'll definitely start getting to that and then
Like a
shot.
Okay, so I think next lesson I'll probably do Thursday night. If you guys can just draw up 5 charts each for me, I know Stu can do it. Warren, just find some time, maybe tomorrow night or something. Brandon, this week. Just draw me up, your change of characters, break of structure, your order blocks, even start implementing your null point of control, your Fibonacci, stuff like that. And everyone starts somewhere. And I'll go over it with you guys. And that's why I like this mentorship. It's not just a course where I tell you what to do and now you're left to do it yourself. You must leverage the mentorship where I can help you and go over it with you. Okay, Warren, your turn. Got any questions about fixed volume ranges that we learned today? And then do you have any charts for me you want me to look at?
Hey Jared, how's it going?
Good and you, bro?
Yeah, okay, just stressed. There's lots of shit going on. So, not really, to be very honest. I'm actually a bit behind in this now. But I probably mentioned to you before that I do a lot of, actually all the trading that I do is on my phone. So
Yeah.
you've got, there's obviously your volume is at your bottom of your screen. This is all extremely new to me. I've never seen this in my life. Well, none of this stuff, to be honest. It's all very new. But the way that I do the trading is what I see. So very much price action, and I react to the price action, and that is always during your big volumes in the afternoon. So it's going to be huge volumes. But for swing trading, what you're showing us here is insane. It's that.
Yeah.
And I think once you get the hang of that, like that's going to give you the precise entries into your trade. So entry and on buys. So obviously it would be the opposite. So what you made into your red zone on the volume that you made the lowest or the initial. What did you call it again? Hang on, I'll write it down. Your low range. In your low range that you made red on, it was translucent or transparent, you said. So.
Oh, yes, that was on NASDAQ.
Well, wherever it is. So that section that you're talking about. If I can, because now I've got to try and put this into practice or what I've been doing.
Yeah.
That is basically your reversal, is it not? That little section will be.
Well, where I showed you was here. So we had a change of character.
Yeah.
And then we wanted to find where we were going to enter to go long.
Okay.
Yeah. Yeah, so we found our fixed volume range at the low, and we found the null point of control of that area.
So that volume, sorry, I want to just put this back on the screen. There you go. It's just old school, yeah. Like I struggle with this stuff. But if you look, okay. So if you go to the bottom of the candle, obviously where it is, you can't see it there, but it's your low volume. Yes, in that little area.
Yeah.
That is that. So why, if it's a question for you, why is the volume low in that reversal there? Like,
Reversal.
well,
What do you mean?
Well, that's your order block there. So your
Yeah, we're finding the order block after we've had the change in character. So we broke a high, and then we're trying to, so the reason I use this is to confirm where my order block is, one, and to give me a reading of where the most price was, where the most volume was placed in that order block or in that zone of the low, so I can confirm where that order block is. So most people would think that this is the order block here, but you would have come close to your stop loss, whereas here we would have got a great entry. It didn't come to the pip down to it, but watching this reaction here off of this zone here, I would have gotten long on it.
Okay, so if you look at that volume there, now you've got it's like, well, it's a wave, like you say.
And then you just see it shoot off of that point of control. So it shows you how much volume is happening on these orders here to give you that change of character.
So that where your volume is obviously where it goes into maximum volume, there where your cursor is. So that is your point of resist. Well, I don't want to call it that.
It's called your nil point of control, NPOC.
Okay, so
That is your highest volume within this range that I've drawn out.
So that's what it respects, is your volume.
So we're looking for, where did the institutional order flow come into the market to change the character, the volume. So you remember when institutions enter and start running price higher, they put a lot of volume into the market, a lot of orders. So you see here how little orders there were here compared to here. That's why price came straight through that area, because there's not a lot of orders there. So it just gives you an idea where price is, where it's going to shoot off of next. And you just see the massive candles after coming into there. This is institutional money. This is not retail money coming into the market with that vicious move up there. I mean, it doesn't come back down. It just keeps going up and up and up and up and up and up. That's your institutional money coming into the market. And that's how we find those moves, is using the volume profile at our order blocks. So we're just refining our order blocks per se.
Okay, that's cool. That's really cool.
Yeah. And for swing trading, it's really nice, because if you're trading, say, 4 trades a month, and you're getting like exact places to put in, your stop loss doesn't have to be huge. I mean, even if you just got in at the order block there, if you break that low again, breaking maybe this order block here, you know the market's going to carry on lower, so you want to be out the trade. But swinging this to the high in, let's see how long that was. That's 11 to 1, and it took 10th of August, 1 day, 1 full day to get that move. But obviously this is on the 15-minute, but if we go on the daily, like I showed you a couple over here, no point of control is just above where it was, so it respected the low point of this volume range.
But there's very little volume there, am I not?
No, it's just the tool in the daily range. It doesn't have enough candles, if you know what I mean.
Yeah.
If I went to the 4 hour to that same zone, you would see it more clearly. Let me show you.
Yeah, that's why you say you look for the time frame with the
Yeah, so you see how many more candles are here now? I can do that. And you can see it respected the low of the volume, because price was so heavy to the downside. As soon as it picked up these orders of this other wave here, that's when it crashed. So if we look left to the point, literally as it goes into those orders, look at that massive down candle. Just keeps going. So yeah, when you see markets like NASDAQ and S&P, etc., make a lot of, like, I can see this market's very heavy just from here. Like before price comes back up, if I put price here, you can see how heavy this price is, right? So if you coming up to a zone like this is all an order block in the daily. You can be sure that as soon as it finds any sort of order help, it's going to come back down. And if we play it through candle by candle, you'll see as soon as it touches that order, boom, how it goes down, because that's institutional orders waiting here just to go full force. And you see how many candles it took to get up there.
Yeah, I know. It's like.
And then it does that in three candles in 12 hours. It took, let's see, time range. It took six days and 12 hours to reach those orders, and then just 12 hours to then get down to that low and beat that low there. So 6 days worth of price coming up, destroyed in 12 hours straight off of the volume.
And that's all banks.
Yeah, 100%.
Now your. No, it's not a question. Okay, that's cool. You've answered
Yeah. Another thing I saw here, going into this chart,
it is very interesting though. I've never seen this before.
you see this volume gap here in the market. Remember I told you there's different types of fair value gaps, but you see this one here,
Yeah, there's a gap. Yeah,
that's a gap.
refilled. Yeah.
That's your Friday to Sunday gap over the weekend. Look how price came halfway into it and then shut down.
So that halfway is on to your see that so that on when you do you get your fib to get your 50% there? Is that
Yeah,
so? That would be over 50%. You would then get out that trade.
so if you look here, to mitigate a fair value gap, you have to be over 50%.
Yeah.
Look how it comes up to that 50% there. And then look at the money go.
Crazy.
There's another one here, how price filled it and carried on down. Because see, this was a full fair value gap here.
Jeez, it's huge. Yeah.
50% and then down. But this is called a volume imbalance. This was also a Friday to Sunday.
If they don't fill that gap now, like as they did there, pretty much.
In a couple days, yeah. So
Then
Monday, one day it's filled. So if we actually look at S&P today, okay, my chart's going to look a bit weird, but this is how I scalped today. Let me just take this off here. But this was our Sunday open here. I mean, Sunday close. Friday close here. This candle, this top, that's why I've got that annotated there. And then this was our Sunday open here. So I've got this all as a fair value gap on the 1 hour here. So what was I looking for price to do is come back into that area. And we had an order block just underneath it and we tipped it to the T.
what time frame are you on? I can't see.
1 minute.
Yeah.
So this was market open. It took out liquidity to the bottom downside. Change of character, fair value gap in here, and this is where I went long. On this fair value gap here. But now I did get out below this 50%. There was a fair value gap right here, this fair value gap here.
So you thought it would turn around after that one?
Yeah, so I took off profits around here, like that. But I knew price was going to go up into this fair value gap from the closing Sunday to opening Monday. price rallied into it, nearly got into it, but if you look on, say, the Nasdaq would have gone into it. If you see there, that was the order block, and this is the Sunday range here. Or yeah, this was the Sunday opening here, and it came into it.
So did you have trades open?
No, I closed here because I saw market coming down like this, and then I got out of here.
But that was today, though. Did you have them? Open? Oh no, you didn't have them open.
No, this was a scalp. This is my scalping.
It's just from today.
Yeah.
Okay. That's lovely.
So I knew price was going to come in full. This whole area here, you could have actually said that there. Yeah, because this is Sunday. Yeah, this is the Sunday opening candle. So to the bottom of that, you see how it had to fill that volume imbalance of the weekend. And once it got it, look how price just shut down. Didn't even look back to come and take this buy side liquidity again. And we'll probably see these lows taken out tonight. Yeah, it'll take out these lows because these are equal lows. No, this was the low of Monday. So this is Asian session. It'll take out these lows, and then there's equal lows below that.
Which might do.
And fair value gap. But then I did look at this as well for anyone that's shorting or looking to short. This fair value gap here is the next one underneath the 50%. So if this low is taken out, it most likely will tap into this fair value gap and then continue up. And this line here is a daily trend that we've been setting. See, our price has been respecting it. Then let me just remove all drawings. We can see it's grabbed liquidity. So this is how every day trader would have been trading it. Shorting here. Look how it just burst through that. And now we're probably going to come back down. Take liquidity out. Continue down.
Obviously, that's of character there, and
Break of trend.
yeah, that is just to take your stop losses. So it will.
Yeah.
probably-
They've been setting up retail traders to now think, okay, this is a resistance line, because look at this wick. Came and respected. Came down, got people in, people targeting these lows, and now it's just taking their stop losses out.
And that would be what time of the day was that?
It's a daily chart.
Oh, it's a daily.
So it burst through on Monday last week.
So this is the S&P. So you kind of think that is that now, because that's what I don't get. Okay, if I trade, well, it would be intraday. When you have a candle that breaks through, and basically you can see it. It's just to take everyone's stop losses. That break that you see there now on the S&P there, is that something to? I mean, because now it's broken the trend. So would you get out that trade then, or is that just to take stop losses and would you hold your position?
You see, I need a narrative in the market now. Because right now, we're still down. We're still going down because of this change of character. We haven't seen a daily change of character. We've seen like a small break of structure here, but I'd like to see this high area here broken to then come back down into a buy zone if I'd go buy. So I'd like to see price break above this order block here and then come back down into an order block, or for price to continue down, break this low and then come back up into an order block somewhere here and then go short.
So if you were in a trade there now, would you
I wouldn't be in a trade.
well, not buy. So would you close you would close your sell trade on that downtrend as it broke through there, or would you allow it to,
Where would I have got in, first of all?
well, right up at the, well, yeah, you wouldn't, because you would have done an intraday, yeah. Or if you're in a long swing trade, you would have been up there on the that top. Sorry, can't see the. Yeah, go up.
The only trade I see I could have been in is here.
I want to buy.
Yeah. That's the only place I see I could have been.
So would you not have been on a sell on the previous high?
This one here.
Yeah, in the fair value gap. Yeah.
This order block here. Because this order block's been taken out here, that doesn't allow me to really look at shorting here anymore.
Okay. All right.
Yeah, that's why I need a change of narrative. I need a story to now look for any other trades.
Okay. But it's those like spikes that you see that one that in that fair value gap there's that spike. Yes. So
That's a news day.
yeah, exactly. So it doesn't really mean much to the trend, but it has broken through.
They took liquidity then to go lower.
Okay. So would you get out there if you were in that trade and
If I was short here,
yes, would you take that spike? 'Cause
my stop loss would be here. But I wouldn't trade a news day. That's why I stay out.
Yeah, obviously. But what my question is, that news day, will that interfere with your decision to go? Would you close your trade if you were in a long on that previous peak?
A short, you mean?
I mean, sorry, go short. Yeah, not
I would have been stopped out. But that's why I don't trade news days anymore. See, I would have seen down here.
profit. Yeah,
I would have taken profit because I know news is coming out. I would have taken partials here, set my stop loss to break even. If I get taken out, I get taken out. These lows here would have been change in character for me. Yeah. But also, it mitigates taking any shorts here because that day went straight through it. So no short setup would have been presented itself.
yeah, okay. Yeah, the news days are insane, but I suppose that's where they go for.
Yeah, that's why every morning before I do anything, it's forexfactory.com. Looking at news for the whole week even. So we have Canadian dollar tomorrow, US dollar tomorrow, New Zealand dollar tomorrow. So if any swing trades, I'm looking to manage these, you know?
Yeah.
US dollar, a big week for US dollar this week as well. Non-NFP on Friday. 1st of Feb, that's going to be a huge one. NFP is the largest volume besides CPI. And an FOMC statement about the federal funds rate, so the lending rate that night as well. Stay out of the market on Friday the 1st of Feb. Trust me, everyone. This is what will happen. Fireworks.
Yeah, exactly. It's just gonna go down, up, whichever way. There is
Whichever way. There is a way. They want to take the biggest amount of liquidity pre-market. So if everyone's going short, they're going to take out everyone that's short, and then they're going to go short after they've taken everyone's stop losses. But then they're going to entice everyone to go long now because it's surely too low, and they're going to take out those after a little retracement, and then they're going to go high again, or the vice versa. Goes 3 or 4 different ways in one day. Yeah. Anyway, shot Warren. Let's see if Stu's got anything for us.
Thank you. Thanks very much.
Pleasure, bro.
Thank you.
Yeah, and go over some charts. Stu,
Boy, how's it?
good and you.
Lekker. First of all, thanks for clarifying that volume profile.
Lekker, bro.
Super nifty tool that I've never actually heard of, or even on YouTube and the previous course that I've done.
Yeah.
mentioned that.
Yeah, bro.
So, and I can see how useful. I mean, it's quite accurate, and just for further confirmation, I mean, it's brilliant.
100%. The upper half, the bottom half, and the point of control is what you should be looking at.
Yes, and it just gives you. I mean, if you've got order blocks, or breaker blocks, and you incorporate that, it just gives you that further confluence. Whether to into that position or not.
Yeah.
But what I was thinking, I don't know if you've got time.
Sure.
Just and for everyone, I mean, I know it would help me to go onto a clean chart like NZD, CAD, or something like that.
That's not clean.
And And then just do like a quick start to finish, like you were sitting down on, I don't know, Monday morning looking to trade a new chart from start to finish, but I'm talking basic and incorporating the volume profile, if you know what I mean. So like higher time frame.
Yes, yeah.
Just to look for setups. I think because then what we and me and everyone can do who's going to watch the video can go back and follow you step by step, but something simple without, doing too much, but just what you would do from start to finish.
Okay, great. I think that's a great one to do next lesson, Stu.
Okay.
I think that's a great one. I'll start with fresh charts and step by step how to analyze charts. I think that'll be a great lesson next one, because that's going to be a full lesson. If I had to start now, it'd be an hour.
That's what I'm saying. I didn't think
Yeah.
have enough time, because look, I mean, I fully understand how the volume profile works. I've got TradingView open next to me, and I've been fiddling with it as you've been explaining it. So in terms
Awesome.
of, I don't have too many questions.
Okay, great.
It would be beneficial for me. I know that I would, and I'm sure that other guys would enjoy it. Just
Yeah.
to clear the noise and say, right, let's start from everything we've learned from start to finish, and then incorporating obviously the volume profile.
Okay, great. I think what I'll do next lesson is I'll record an hour of me just analyzing charts, and then I will use that as the next lesson for you guys, because I'll be in France. So whenever I've got an hour, I'll record myself going through all the charts, and then I will upload the videos unlisted, and I'll share it to you guys on Wednesday night at 8 p.m. so you guys can go through it. And then I will post all the setups that I do find as well, then on the group as well, for you guys to then look at. And then you'll have a guide on how I do it. And then the following week, I'd like to go over 5 charts of you guys doing my step-to-step process of going over the charts.
Bit of homework. So then at least what's nice is that we can rewatch your videos.
Yeah.
We're looking at our charts, and then you'll obviously give a couple examples. So if you get stuck, we can refer to the different charts that you're going through, and then mark up our charts.
Perfect.
Kind of your, start to finish guide.
Perfect. I'll do that. That sounds like a great next lesson. Yeah, thanks, Stu. Okay, guys.
That's for me. That's it.
Yeah. Lekker. Well, it was a longer lesson than I thought. I had to show you guys one thing tonight, but hey, that's how it is. Mentorship. Cool. Thanks, guys. I will chat to you during the week. I'll get that video up for you guys of me analyzing the charts step by step, process from the higher time frames down to the lower, incorporating volume profiles, breaker blocks, order blocks, changes of character, break of structure, nil point of control, everything like that. I'll do that for you guys this next day or two. And yeah, have a good evening, and go over the old lessons if you don't remember anything, because next week's going to be everything included, and you must understand what I'm going through. Okay. Thanks, guys. Have a good evening.